Hello people, welcome to this channel. In this video, we're going to learn how to determine the pip difference and also the lot size of gold. We've talked about the meaning of pips and lot size needed for any trade in our previous video. So you can go watch that video to get a deep understanding of today's video. Make sure you subscribe to this channel for more content like this. So with gold, the XAU is a symbol for gold. USD is a symbol for United States dollar, which is the world's primary reserve currency and the standard currency used in most global commodity markets, including gold. So, coming to this chart, the XAU USD currency pair is used to code the price of gold in terms of how many US dollars are required to purchase 1 ounce of gold. So on this chart, the prices on the price scale are in United States dollar because XAUUSD means 1 ounce of gold equals the current price on the scale. So from here, 1 ounce of gold equals the current price on the scale. So right now from here, the current price of gold is $2,509. Okay, so that means if you have 1 ounce of gold, the money or the worth is $2,509. Calculating gold pips. So in calculating gold pips, we find the difference in prices, then multiply the answer by 10. So from here, these are the prices. Okay, so for us to find the pips, we just subtract the difference in the prices, then multiply the answer we get by 10. For example, we have, let's say the price of gold is at $2,501 and it moves to $2,510. For us to find the pips movement in this, we just subtract the prices, then multiply the answer we get by 10, and that would be the pip difference. So let's subtract it right here. So we have 2510.67 minus 2501.84. This is going to give us 8.83. And what you have to put in mind is that with this difference in prices, it means the difference is $8.83. Okay, so $8.83. For us to find the pip movement, you multiply this $8.83 by 10, and that's going to be our pip movement. So it's going to be 8.83 times 10. So let's come to the calculator. So multiply this one by 10. We are going to get 88 equals 88.3. 88.3. And with this 88.3, just round the number. So by rounding it, you're going to get 88. So it is going to be 88 pips. Very simple. Let's take another example. So let's say the price of gold is at $2,491 and it moved to $2,486.31. So you just find the change in dollars or the difference in the prices, then multiply by 10. So let's bring in our calculator. We're going to subtract 2491.98 minus 2486.31. We are going to get 5.67. It means the change in prices was $5.67. So I'm going to write it right here. $5.67. then our pip movement is going to be 5.67 times 10. With this, we are going to get 56.7. So with this 0.7, we just run the number. So it's going to be 57 pips. Very simple. Let's go to the chart and take particular example. So let's say our entry is somewhere here, $2,484.24. So that's our entry, and we have our stop loss right here, $2,469. So that is our stop loss. Let's change the color to yellow. So this is our buy setup or our buy trade. So for us to find the pip difference, that is from the entry to the stop loss, we have to subtract the stop loss from the entry, because the entry is bigger than the stop loss. So for 84.24 stop loss, 2469.01. So this is our prices. So we subtract the stop loss from the entry. We have 2484.24 minus 2469.01. So we have 15.23. So equals $15.23. Okay, so from here to here, the change in price was $15. From this $2,484 to this $2,469, the change in prices was $15.23. So with this $15.23, we multiply it by 10 to get the number of pip movements. So you're going to get 15.23 times 10. That's going to give us 150 pips. So we run it to the nearest number. Always you have to run it to the nearest number. This is going to give us 150 pips. Okay, you can also come here and use this tool and just put it on the stop loss, then drag it to the entry. You can see that you also have the same value, that is 15.08 change. So you just multiply this 15.08 we calculated from here. This 15.23, they also have 15.08. Let's say we are risking $2,000. So bring our long position to the entry. Here's our entry, here's our stop loss. So that's our stop loss, and from here also you can see that from the entry to the stop loss, the change in price was $15.04, and here was $15.08, and we also calculated and got $15.23. So you can also use this tool to calculate the pip difference, or the number of change in price, that is $15, and you multiply this 15 by 10 to get our pips. Okay, so let's say you're going to risk $2,000 on this trade. We are buying this trade with $2,000, so that means our risking $2,000 on this particular trade. And I have a complete video on how to choose the right lot size for the trade, or which of the lot size is considered for any amount you want to risk in a trade. So you go back to the videos, then watch it so that you understand this video. How to calculate the lot size. Let's look at this chart right here. We know that the standard lot, it starts from 1 to any number. Okay, so if you enter 1 on your trading platform to any number above 1, that is your standard lot. And the money involved with every pip movement is $10. Okay, that is the standard lot. Okay, so the mini lot also ranges from 0.1 to 0.99. So this 0.1 is our 1 mini lot, and this 0.99 is our 9 mini lots. The money involved with every pip movement is $1, and it ranges from 0.1 to 0.99. Okay, to the micro lot also ranges from 0.01 to 0.09. So this 0.01 is our 1 micro lot, and this 0.09 is our 9 micro lot. And the money involved with every pip movement is $0.1. If you are risking anywhere between $100 to $1,000, then the mini lot is what you're supposed to enter, and that's with that every pip movement is $1. Risking anywhere between $1 to $100, then the micro lot is what to be considered. Okay, so let's continue. With this $2,000, we know that for us to take trade or risk $2,000 on a trade, we have to consider the standard lot size. And with standard lot size, every pip movement is $10. That is, every pip movement with one standard lot is $10. Then we first find how much you will make with this 150 pips movement by entering one standard lot. That is one standard lot. With every pip movement, the money you make is $10. So this is how much you make by entering one standard lot with one pip movement. So we find how much would you make by entering one standard lot on 150 pips movement. So if one pip gives us $10, then 150 will give us how much? So we just multiply this $10 by 150. Going to be 150 times $10. That is going to give us 1,500. $1,500. So this is how much we will make by entering one standard lot. By entering one standard lot with 150 pips movement. So it means if you enter this one standard lot size with this 150 pips movement, the money involved or the money at risk is $1,500. But for this trade or our trade, you want to risk $2,000. So you can rewrite this one so that you can be able to find for the $2,000. So it's going to be, by rewriting it, you're going to have is equal to 1. So if this $1,500 is equal to one standard lot, then the $2,000 you want to risk, how many lot sizes are we supposed to enter? So okay, so now this $1,500 is equal to one standard lot. So this $2,000 is going to give us how many standard lots? If 1,500 gives us 1, definitely this $2,000 is going to give us more lot size we need for our trade. So we are going to have it to be 2,000 divided by $1,500 times 1. So let's bring our calculator. 2,000 divided by 1,500. It means you're going to get 1.33. So it's going to be 1.33 lots. By entering this 1.33 into MetaTrader 5, if it means if this trade goes against us, we are going to lose $2,000. But we can also have our take profits. That is where we want to get out. if you're okay with the profit. So from here, this risk reward ratio, it means with the $2,000 we are risking, if the price reaches here, this level right here, that is the risk reward. That means we multiply our risk, that's $2,000, by this number here, that's 3. So it's going to be 2,000 times 3, that's going to give us $6,000. So if the price goes in our favor, you're going to get $6,000. Or we can also bring this right here to make it risk to reward to be 2. It means if the price goes in our favor, we multiply our risk, that's $2,000, by this 2, and that's going to give us $4,000. So if it goes in our favor, we are going to receive $4,000 from this trade. Let's try and take another trade. So let's say with this trade, we have $10,000 in our trading account. So we are going to sell this market with $10,000. And we have $10,000. Okay, so we come to the chart, and let's say this is where we want to sell the market. So this is going to be our entry. And if you are going to sell the market, the stop loss will be above the entry. So we want our stop loss to be somewhere above this highs, and we are selling this market right from here. Okay, so we bring in our short position to just right here and put it on where you want to sell the market. Then this is our stop loss right on our stop loss level. So for us to find the pips, we just subtract the entry from the stop loss, then multiply it by 10 to get the number of pips movement. Let's write the values right here. So we are selling gold with $10,000. So let's write there. We have our entry. Our entry is $2,500. So we write it here. Point 1. So let's do 0.2, because when you run this value, you're going to get 2. Then our stop loss is $2,530. 0.23. So this is the stop loss and this is the entry. So we subtract the entry from the stop loss. Minus 2,502 cents. So we're going to get $30.03. We then multiply this 30.03, that is $30 by 10 to get the number of pips movement. 30 times 10. This is going to give us 300 pips. Now that you know the number of pips movement, let's calculate the lot size. With this 300 pips, by entering one standard lot with this 300 pips, the money involved is going to be $3,000. It's going to be $3,000. Because for every pip movement by entering one standard lot, the money involved is $10. So if the pips difference is 300, just multiply the 10 by the 300 to get the money involved with this 300 pips. So now that you know the money involved by entering one standard lot with this 300 pips, if one standard lot give us $3,000 with this 300 pips movement, then $10,000 is going to give us how many standard lots? So let's rewrite this. So it means $3,000 give us one standard lot. Then $10,000 is going to give us how many standard lots? That is how it is. So we just divide this $10,000 by this $3,000 to get the lot we are supposed to enter for us to raise this $10,000. So let's bring in our calculator. So it's going to be 10,000 divided by $3,000. That is 3.33. It means our lot size is 3.33. That is, if you enter 3.33 in our trading platform with this 300 pips, the money at risk is going to be $10,000. So from here, this is our stop loss. So if the trade goes against, we're going to lose $10,000. But if it goes in our favor, maybe to here, we just multiply the $10,000 by 2 to get the money you're going to make from this particular trade.